Welcome to the July 2020 MHP NOFA workshop. My name is Lynn Jones, and I am one of two program managers for the multifamily housing program. I, along with Hector Leyva, manage the two teams for MHP. As you know, MHP releases a NOFA every 6 months or so here we are again. The Round 3 MHP NOFA was released on July 20th of 2020 and has several updates and additions. Today, we have members of our staff who will cover multiple topics with you and will expand on and provide details for all the sections shown here. Michael will be presenting on program overview. Tarsi will cover improved MHP application. Kenny will go over application review and threshold. Deborah will cover rating and ranking or scoring and bonus point. Mylan will cover feasibility, and Joe will cover document upload and application submission. MHP Round 2 recap. The Round 2 NOFA was released on January 2nd of 2020 and published an initial $297 million in funds available. Out of that, $277 million was for MHP, with an additional $20 million set aside for excess sites. The projects that were contemplating applying for the excess site set-asides were not in a position to submit by the application due date, which resulted in the $20 million being removed from the funds available for the excess sites. This $20 million set aside will now be released as its own NOFA, administered by the MHP program at a later date. The program has since held back the $20 million and combined them with the leftover funds from the Round 1 of MHP funding. These leftover funds totaled an additional $36.4 million, in which we added to the Round 2 pot, giving us just over $313 million to award for that round. The department met the mandated set-aside for senior projects, as well as the geographic distributions for northern and southern projects. We were able to fund all remaining rural projects in feasibility. The due date for applications was March 2nd of 2020, with awards announced by end of June 2020. Lastly, in regards to the standard agreement boilerplate, it has been approved and sent out to all of our awardees. 18 of the 24 awarded projects have the borrower structure in place. Our MHP teams have begun the organizational document review process, and you should be receiving, if you haven't already, a list of outstanding documents needed or clarifying questions. The department's goal is to have a majority, if not all of the projects, have executed standard agreements by end of October of 2020, regardless of the construction closing date. To demonstrate how competitive and oversubscribed Round 2 was, and is our expectation that all subsequent rounds will be similar, the current and following slides will show the breakdown of the Round 2 review phases. On the application due date of March 2nd, the department received 63 applications. 3 of those applications were immediately rejected due to incomplete application or for having a self-score below the minimum 90 points required for threshold. We had approximately $709 million in requests. With just over $313 million available, we were oversubscribed by almost $396 million. During the threshold phase, staff reviewed a total of 60 applications. We saw a 30% fail rate from threshold, with projects failing for ineligible sponsor, incomplete application, and site control. So, we ask that you exercise caution in submitting your applications. Of those 60 applications, 41 moved to scoring. During the final phase of review, feasibility, 28 applications moved forward. This allowed us to meet our set-aside and geographic distributions and have some cushion in the event any of the recommended projects were not approved by our internal loan committee. 4 projects withdrew during various phases of review as they received other funding. This left us with 24 projects which were awarded over $310 million of MHP funding. The current slide shows a breakdown of all awarded projects and funding. As previously stated, the MHP program was able to meet the senior set-aside with 20.22% of the funds going to 5 senior projects. In meeting our geographic distributions, 36.36% of funds went to 9 projects in the north, while 47.68% of funds went to 10 projects in the south, and finally, 15.96% of funds went to 5 rural projects. To reiterate the competitive nature of the MHP program, the following is a breakdown of the minimum scores and tiebreakers needed for round 2 funding. Senior projects had a minimum score of 113 points. Rural projects, a minimum score of 95 points. North projects, a minimum score of 115.8 points. And South projects, a minimum score of 115 points. Tiebreaker scores were a factor in determining which projects moved forward and were awarded. Lastly, 18 of the 24 projects received the bonus point. The slide you are seeing now represents the awarded projects and the impact they will have on housing. The results you, as awardees, along with the department, will build and develop to the benefit of thousands of Californians across the state. So let's look at a breakdown of projects. 23 are new construction, 1 is an acquisition rehabilitation, 19 projects are considered urban. For MHP project types, we have 9 large family projects, 7 special needs projects, 12 supportive housing projects, and 5 senior projects. This leads us to a statewide impact of 343 supportive housing units, 244 special needs units, 1,022 MHP assisted units, and 1,112 other restricted units defined as 60% AMI and below. Out of the 24 projects, 2,289 total units will be created. Projects will be spread over 15 cities and 10 counties. All 24 projects anticipate construction commencement within 6 to 12 months of award. That was a lot of numbers, percentages, and information. Hopefully, this gave you a good glimpse into how the program performed last round. This now concludes the recap of round 2. Now that we had previously shared a recap of round 2 MHP, let's switch gears and cover what is new for round 3 MHP. For reference, all of the information I am covering is located in the NOFA Section 1 under What's New. This overview covers high-level changes to the NOFA for round 3. Later in the presentation, representatives will go into more detail on the individual updates applicable to the different sections. New MHP application. On behalf of the department, MHP is excited to announce an improved application process. The new MHP application combines the prior universal and supplemental applications into one application for a more efficient and streamlined process for both internal and external parties. Over the years, the department has heard your concerns regarding the repetitive nature of some of the information requested in both the universal and supplemental applications. As a result, our application development team has been hard at work removing the duplication, clarifying commonly asked questions, and reorganizing the tabs to improve the flow of application information. HCD's overall goal is to enhance the process for applicants and create efficiencies for a more expeditious application review process. Later in this presentation, more information, along with screenshots and instructions, will be covered in detail. Look forward to more programs rolling out with this same approach in the very near future. Application submission. Round 2 MHP applications were submitted through Financial Assistance Application Submittal Tool, otherwise known as FAST, along with wet signature documents coming in physical binders. This round, we have fully moved into 100% application submission through FAST with no wet signature requirements. Long gone are the days of 5-inch binders and flash drives. Department funds and multiple applications. 2020 was a busy time for developers and the department alike. Multiple HCD funding programs had active NOFAs at the same time, including MHP, CERNA, AHSC, CalHome, IIG, VHHP, and NPLH. Because of that, the department had numerous projects which had submitted applications to separate programs without notification to other funding programs. This led to an extra coordinated effort across programs to ensure there was no subsidy stacking, which there was. So we want to be clear in that subsidy stacking is still prohibited under Guideline 7302H, meaning use of multiple department funding sources on the same assisted units is not allowed. In an effort to help identify projects which may have other department funding sources, we have added a new disclosure of other HCD funds question on the application. Swapping awards. Over the last 2 rounds of MHP, we have had several projects apply for more funds in a subsequent round, which was not fair to those who were not funded in the prior round. Additionally, projects had applied for MHP after being awarded other department funds for the same units to find out if one funding source would be better than the other. This meant that one project was being worked by several programs where funds were potentially going to be given up once another funding program awarded. In applying for multiple department funding sources, applicants choosing to replace or swap one funding source with MHP funding ties up program funds and causes delays in housing unit production. This also is an inefficient use of our already limited public resources. So, to avoid a delay in the deployment of funding, HCD will now require forfeiture of a prior award in writing prior to the application due date with no assurance of receiving a new award. This prohibition applies to funds awarded under any department program, including a prior MHP award. Scoring. Guideline section 7320B2A is revised under this NOFA in section 3F2. As we undergo a guideline revision for release around December of 2020, we are revising the reference guideline section in the NOFA to widen the net of potential applicants. During our most recent stakeholder engagement meetings related to our guideline revisions, we heard from many external partners that a barrier for them was leveling the playing field for their applications to be competitive when it came to projects serving a special needs population. As a placeholder for a future addition to the upcoming guidelines, in the interim, the department was able to approve an additional 5-point scoring criteria for large family, new construction projects, where at least 15% of the restricted units restricted under the program regulatory agreement are restricted for occupancy by special needs populations. Bonus point. Last round, we piloted a bonus point worth 1 extra point for all applicants that submitted their borrower organizational documents. The purpose was, and still is, to allow for the efficient and timely production of standard agreements with a goal of producing the standard agreement within 90 days following the award announcement. While this bonus point was credited to many projects this last round, we did find it necessary to expand on what exactly does not constitute awarding the 1 bonus point, as we ran into during our appeals. Examples include, but are not limited to, applicants who fail to submit all necessary organizational documents for any of the applicable borrowing entities will not be eligible for the bonus point. For-profit sponsors, which have not included the necessary nonprofit partners, will not be eligible for the bonus point. Applications that include to-be-formed entities or indicate an intent to change or do change the borrower organizational structure at a future date will not be eligible for the bonus point. For the greatest transparency, we detailed specifically on the application checklist the list of documents required for each of the borrowing entities as they apply to your borrower structure. Regarding electronic signatures, since COVID, the way we do business has seen constant change and rapid adaptation. One of those adaptations we experienced early on was the ability to electronically sign documents to keep our business moving forward. The department is accepting e-signed documents, resolutions, etc. Because of that, there are no wet signatures that are required. Enforceable funding commitments, or EFCs. As previously mentioned, we are currently working on amending our guidelines for release in December 2020. In the meantime, the department would like to call attention to a slight modification to guideline section 7320 B, 5, A, and D. As you are all aware, TCAC 4% tax-exempt bond financing is now competitive. Well, what does that mean for you? We are now requiring an EFC or term sheet for the 4% bond financing to be included with your application. This financing will no longer be considered committed. To clarify, we are requiring the commitment letter for the bond lender, not the CIDLAC allocation commitment. Aside from the bond financing, our guidelines have not changed regarding construction and perm financing. However, what we used to automatically consider committed financing will no longer be such. We will now be requiring EFCs for all construction financing and all deferred payment financing, grants, and operating subsidies. EFCs or term sheets are to be included with your application at the time of submission. Some additional clarifications that we have added to this NOFA include joint venture. We have now added a distinction between the actual joint ventures and other types of legal entities. We have also added a certification of sponsor capacity with sponsor certifications and project staffing charts added to the new MHP application. And documentation of principals experience now has specific documentation requirements as outlined in the MHP application. I, along with Hector and Laura Bateman and the MHP teams, thank you for your time thus far and look forward to what will be submitted for round 3. I will now turn it over to Mr. Michael Murphy, who will present the program overview section.
Thank you, Lynn. This is the voice of Michael Murphy, and I'll be covering the NOFA overview and program overview for the presentation today. On a quick note, if you happen to be following along in the NOFA, guidelines, or the application, representatives will be making every effort to cover things in the order in which they appear in the given section. Starting off, our authority for our July 2020 NOFA is given by Senate Bill 3, which authorized the Veterans and Affordable Housing Bond Act of 2018 and was adopted by voters on November 6, 2018 as Proposition 1. MHP funding cycles are scheduled twice per year. Round 2 was back in January. Round 3 started just this last July. Round 3 has approximately $175 million to award with a maximum loan amount of $20 million. Now, the set aside is the same as each previous round with 18.3% for senior housing projects, and this comes directly from our guidelines. The geographical distribution is as follows: 20% going to rural projects, 30% going to Northern California projects, with 45% going to Southern California projects. And it is very likely that a project can meet more than one of the set-asides. For example, a senior project located in Southern California. Here's a snapshot of the NOFA timeline. The NOFA is dated July 15th, 2020. Applications will be due 60 days following the NOFA date, which puts us at Tuesday, September 15th, 2020 at 11:59 p.m. Pacific Standard Time. We will present recommendations for awards to the Internal Loan Committee with award announcements following in December of 2020. MHP offers awardees a loan. The MHP loan terms will be a 55-year term with 3% simple interest. This will include a mandatory debt service of 0.42% with unpaid interest and principal due at the end of the term. Base loan limits are $175,000 per unit for supportive housing restricted units and large family new construction restricted units located in a high or highest resource area according to the TCAC Opportunity Area Map. All other restricted units are at $150,000 per unit, and this includes the manager's unit unless otherwise specifically restricted. The loan amounts are set according by county and AMI levels, and these can be found on the HCD website, and there is also a link within the application on the max loan and unit mix chart. Now we need to clarify between authorizations and resolutions. The sponsor authorizing resolution. Now this gives the governing board for the sponsor and co-sponsor, if applicable, it gives the authorization for the corporation to apply for MHP funding. This is a threshold requirement and must be submitted at the time of application. The OD1, OD2, and OD3, these are required post-award and from awardees only. This provides approval to borrow the funds and identifies the entity's relationships. The OD1, the borrower has either received or been assigned a conditional commitment of funds and has the power and authority to borrow those funds. The OD2, the general partner or the LLC is authorized to act as the general partner of the borrower. The OD3, the sponsor is authorized to act as the member manager of the LLC and can execute the standard agreement and certain other documents required by the department and all amendments. This is collectively known as the MHP loan documents. Let's talk relocation law. Relocation law provides important protections and assistance to displaced persons and entities affected by the acquisition, rehabilitation, or demolition of real property for government-funded projects. If your project is not subject to the state relocation assistance law, you must provide a detailed narrative on the project overview tab, and just stating not applicable is not going to be sufficient. You will need to provide a detailed answer. If your project is subject to the state relocation assistance law, you must provide an initial relocation plan. Please see our guidelines, section 7315, for more details. The relocation plan is subject to review and approval by the department prior to the disbursement of program funds. If the relocation plan that is submitted is equal to or greater than a year old at the time of submission, the department may ask for an update. Article 34. Now, in previous rounds, there was some confusion surrounding this topic, and the department would receive both an allocation letter and a legal opinion letter. This is okay if you really want to submit the extra documentation, but you only need to submit one document depending on which applies to your project. The two possibilities for the project are: one, the project is compliant with Article 34 and an allocation letter is required. Or number two, the project is claiming an exemption of Article 34 and a legal opinion letter is required. This slide illustrates a project compliant with Article 34 where an allocation letter is required by an official that must include the key items listed above. This slide illustrates when the project is claiming an exemption from Article 34 and a legal opinion letter is required. It must contain all the necessary information, including all public funding sources, the number of low-income units, and the exemption is supported by facts and also by the Constitution, statute, or case law. To reemphasize, you only need to provide an allocation letter or legal opinion letter, depending on which applies to your project. That concludes my part of the presentation today. I would like to introduce you to Tarsi Hodge, who will be your tour guide through the new and improved MHP application. Take it away, Tarsi.
Thank you, Michael. My name is Tarsi Hodge, and I'll be going over the Multifamily Housing Program application highlights. As Lynn had mentioned in What's New, we have exciting news for MHP Round 3. The application will be a single application. You no longer have to complete both the universal and supplemental applications. We have combined the two together into one fully integrated and cross-functioning tool called the Multifamily Housing Program application, or in short, MHP application. The content is the same with some updates and removal of redundancies. In many areas, once information is entered, it will flow over to other areas of the application that require the same information. So you're no longer entering the same data over and over. This eliminates discrepancies when updating one area and forgetting to do the same in another. Another upgrade is on the operating budget and cash flow. There's now a yellow highlighter that spans the active row. That way you don't lose your place, which is easy to do on large spreadsheets. The cash flow tab has also been updated with the year columns at the top of each section, not just the top of the sheet, So no more scrolling up and down to be sure you're looking at the correct year. So let's get started looking at some of these upgrades. Click on the Enable Editing and/or Enable Content buttons before you begin your data input. You will not have full functionality if you do not. Make sure all submissions are completed on non-Apple products, as Excel completed on a Mac is not compatible with our systems. In order for the application to be sufficient for us to perform our review, please submit all required documentation as specified in the document checklist. It's our recommendation that you complete each tab in order, as some information carries over from one section to the next. If you start from the beginning and continue in order, you will minimize error messages. There are areas where some information flows backwards, so don't be worried about information that has not flowed in until you complete the entire application. Once your application is complete, if any of these cells have not populated, you can reach out to app support. We will have an example of the backward flow in a couple of slides. Here's a portion of the document checklist. The first column identifies which documents are threshold items. If these apply to your project, they must be submitted with the application. All documents that apply to your project should be submitted by the application due date, not just the threshold items. After the application due date, no additional documents can be accepted to meet threshold and/or scoring requirements. The second column lists the naming conventions for how the document should be organized. When submitting your electronic copy via the Financial Assistance Application Tool, referred to as FAST going forward, the naming conventions will be a drop-down selection, which should match what is in this row. Joe will go over the FAST system later in the presentation. The column on the far right is a drop-down selection indicating if the document has been included. Let's move on to the Project Overview tab. The Project Overview tab has several new items. The very first thing in this tab is a new section for disclosing any other HCD program funds you've been awarded, plan to apply, or have applied for. If already awarded, provide the awarded date and a copy of the award letter in your file. If you're in the process of applying or already submitted your application, enter the expected award date. If you've applied for department funds in the past, then you are aware that the yellow cells are to be completed by the sponsor with the requested information. As you see, some of these cells are no longer yellow, which means the information will be feeding in from other areas of the application. These screenshots are good examples of this. The total MHP funds requested and number of units will all be 0 until you complete the Max Loan and Unit Mix tab. After you complete that tab, you can come back to the project overview and see that the loan amount and units have auto-filled. This is an example of the backward flow I mentioned and not needing to enter the same information in multiple places. You change it in one area and it will flow throughout the application. Make sure you are completing the entire application before reaching out for technical assistance. In combining the two applications, we did update naming convention of the tabs for consistency and clarity, but we have found that there are references in the application to the old naming convention. One I would like to point out is the Project Selection tab. In the old supplemental application, this was the name for the scoring section. On this new MHP application, we changed the name to Scoring, which makes more sense. We have included a screenshot of one of the areas where the naming convention was not updated. We do not want sponsors to be confused as to where they need to go to complete the experience section if answering yes to this question. If you see any reference to Project Selection tab, that is actually the Scoring tab. New to this application is the Sponsor Capacity Project Staffing Chart. Please be sure you are completing this with all required information to support certifications of sponsor capacity. which is part of being an eligible sponsor. Be sure to pay attention to the red shaded cells in the project overview tab. The red signifies either the need for additional documentation, a critical threshold item has not been met, or that a letter of explanation needs to be provided with your application. Also in the project overview tab is the very important project type selection. If these checkboxes are not showing on your application, be sure your content and editing are enabled. You may have multiple project types, so be sure to select all that apply to the types of units in your project. For example, if you have a large family project with special needs units, you must select large family and special needs. Additional tabs open based on your selections. If your project does not qualify as a special needs project, but you do have special needs units, and they are not assisted by other department funds, you should still be selecting this type so that the correct tabs open for completion. If you are claiming the 5 points for having at least 10% of the restricted units for occupancy by homeless households, Section 7320B2C, then you would need to select special needs for the required tabs to open. You must be sure that your project fully complies and qualifies for at least one project type. There is a new section on this application for joint ventures. If the sponsor chooses joint venture as their eligible sponsor type per Section 7303D, then additional rows open that must be completed. Just having a co-sponsor does not make you a joint venture, and the borrower LP is not a joint venture within the meaning of 7303A. If this sponsor type is chosen, the department will be looking for an executed joint venture agreement and all items listed in this section and on the document checklist. These are threshold items since they are part of the sponsor documents. It is critical you provide all requested documents. Many parts of the UA have been incorporated into the project overview tab, and one of these we want to point out is the unit size chart. This chart must be completed with your average unit size because this information flows over to the max loan and unit mix tab for calculating the square footage for shared cost. If you do not complete this section, then your max loan amount will be $0 since the square footage will be 0%. Let's look at the max loan and unit mix to see how this flows over. This is a screenshot of the unit mix portion of this tab. As you can see, it's still pretty much the same as round 2. Some of the most common errors we saw in this unit mix are not completing the full project units. Make sure you are completing the unit mix with all units associated with your project. This includes units funded by other programs, market rate, and managers units. Units not assisted by MHP, but they are restricted by another entity and or other HCD source. These should be listed in column G under total other restricted. If any of those units are special needs or supportive housing, please break those out in columns H and I. This example shows that the project has NPLH funded units. When you have other HCD funded units, you must list the program source and the number of assisted units. If any of the cells turn red, make sure you check your math because that means you've entered more units in the mix than you have in the total units. You can hover over the red triangles in the cells for notes on what could be wrong. The calculation at the bottom right of this example will be green if you have met the bedroom size requirements for large family. So let's finish looking at the rest of this tab and how all of this works together and flows in. Now that the UA and supplemental apps have been combined, there are many items that are auto-calculating based on the information you've already entered. The Max Loan and Unit Mix tab is one of these that has much of the work done. We have broken lines out and given you references in red text as to where the information is coming from, so there is transparency on how we are calculating your loan amount. See the section with the orange arrow? The bedroom size is feeding in from the unit size chart we completed earlier. the gross square footage of all residential units versus the gross square footage of restricted units is calculated using the amounts entered in the unit size chart and the units you have entered into the unit mix. Please note that for shared costs, the manager's unit is considered a restricted unit for this calculation only. If this section is not calculating, go back to your project overview tab and verify you have completed that unit size chart. Another benefit to combining these applications into one is that we now have supplied you with additional lines for breaking out the annual debt service expenses on the operating budget. You no longer need to combine bond issuer fee and other lender, city, county expenses into one small box. Any of these lines that are yellow can be changed. What is typed in them now are just examples of what expenses we are looking for, but they do not need to stay these specific items. The MHP 0.42% fee and bond issuer fee are hard-coded and cannot be changed, but all others can. So please make sure to make use of this and break out each expense on its own line. That way we don't have to come back and ask you later. If you do have multiple sources of HCD funds, as the example shows, make sure the source is broken out individually. In this example, the top left is how the application looks when downloaded, and the bottom right is an example of how it can be completed with different annual debt service expenses. As you can see, we've changed many of the yellow lines to the sources that this project has. These annual expenses and what you title them will flow over to the cash flow spreadsheet in debt service. So let's look at that next. You can see in this example how the annual financial expenses has fed into the cash flow. As mentioned earlier, the cash flow now has the years above each section rather than just the top row of the spreadsheet. And you can see the yellow highlighter to show which row is active. As you click into other cells, this highlighter will follow and highlight the entire row. Next up is the Reserves Calculator tab. To help meet our goal for transparency, we have updated this tab with the Transition Reserve Calculator. The first question asks if you have project-based rental assistance. If you answer no, the remaining boxes will gray out since transition reserve is not required unless your project has project-based rental assistance. If you answer yes, you'll need to complete all the following questions, which walks you through how we at HCD calculate the amount of transition reserve required for MHP. We've provided examples in red print to aid in understanding how we do this calculation. If you are providing a different amount in your development budget, please provide your explanation in the comments box and how you calculated that different amount. Step 2 is only required if you are funding any portion of your transition reserve from cash flow. If not, you may skip this step. This is rare to use this method, but if you do, you cannot use the discounted amount at 2% simple interest. You must use the total transition reserve required amount in section 1. The supportive services plan is required if you have a project that is either supportive housing or special needs, or if the project has these types of units that are not assisted by other awarded HCD funds. There have been a few edits to the questions in this tab, so be sure you are reading each carefully. If you have a previous application, you should not just copy and paste since there are changes. A new feature that's been added to this target population box. You need to complete how many supportive housing and special needs units you have, then complete the drop down with the target population or populations of your project. If your project is special needs project type or you have any special needs units, you will be required to complete this new tab. The S4 Special Needs Experience tab has a section for providing the target population or populations and narrative boxes for information needed on the experience of the involved parties. This information is required for us to complete our feasibility review. Please be as detailed as possible. But remember, this is not a sales pitch, but rather detailed information on the party's actual experience. For projects with supportive housing or special needs populations, it is a requirement to complete both a supportive services plan and supportive services verification form. To avoid an incomplete application, it is imperative you select the special needs and/or supportive housing checkboxes on the project overview tab to open the required tabs to obtain and complete these documents. The supportive services verification form must contain a signature from the appropriate agency certifying a copy of the project's supportive housing plan has been submitted and reviewed. Please note, a wet signature is not required to be submitted with your application. If you have any technical issues with the application, please complete the application support tab with as much information as you can. Email your unlocked application to appsupport@hcd.ca.gov. This is not a complete list of all changes, but some of the highlights we felt should be pointed out. Now that we've made it through these exciting new updates to the application, we're going to take a 10-minute break, and when we return, Kenny will cover application review and threshold.
Hello and welcome back. My name is Kenneth Turner and I'll be taking you through application review and threshold. The application must have a minimum self-score of 90 points. Applications must be submitted electronically using FAST on or before September 15th, 2020 at 11:59 Pacific Standard Time as stated in the NOFA. Original wet signature documents are no longer required. The entire application will be submitted electronically. Later in this presentation, Jill will go into further detail regarding the submittal process. During the threshold and scoring application review phases, no new, additional, or revised documentation will be considered. As witnessed in MHP rounds 1 and 2, oversubscription will occur. Based upon the total number of applications scored and ranked and the total funds available, the department may establish a point score cutoff after the initial phase of the review process. If an application will not be within the fundable range as indicated in the preliminary point score, additional review by the department is not required. The application review process consists of 3 phases. The first phase is threshold. The department will review the application to ensure it meets the minimum threshold requirements as stated in the July 2020 NOFA and 2019 MHP guidelines. The second phase is scoring. During this phase, applications will be reviewed based on the scoring criteria set forth in the July 2020 NOFA and 2019 MHP guidelines. The highest ranking applications will then move on to the third and final phase, feasibility. The project will be reviewed for compliance with program requirements and the 2017 UMRs to determine if the project is financially feasible. You will receive a determination letter from both threshold and scoring reviews. If the application has been determined to be ineligible and you wish to appeal, it must be in writing and submitted by the deadline specified in the letter. The basis of the appeal must be on the decision made by the department in this NOFA only and does not apply to past or future NOFAs. Once a decision is made, it shall constitute the final action of the department. Please refer to the appeals process in the July 2020 NOFA. Now let's continue on to the first section of application review, threshold. As we review the threshold section, please note that all section references are subject to the 2017 UMRs, the 2019 MHP guidelines, and the July 2020 NOFA. I will be discussing the minimum requirements related to threshold, which are eligible sponsor, eligible project, site control, submitting a complete application, and initial support service plans for special needs and supportive housing populations. An eligible sponsor shall be the following. A sponsor shall be any entity which meets the requirements outlined in Section 7303C. A sponsor shall be organized as a for-profit, limited profit, or nonprofit. In order to be eligible for funding, a sponsor must demonstrate experience relevant to owning and developing affordable rental housing through evidencing current capacity and include a staffing chart set forth in the application. As Tarsi mentioned earlier, additional clarification distinguishing joint venture from other types of legal entities has been added to the July 2020 NOFA. Specifically, a joint venture is defined as an association of two or more persons or entities who combine their property, skill, or knowledge to carry out a single business enterprise for profit. A sponsor formed as a joint venture in accordance with Section 7303A shall comply with requirements of 7303D. An eligible project must be one of the following: new construction, rehab with or without acquisition, or conversion of a non-residential structure to a rental housing development containing 5 or more units. At the time of application, construction work shall not have commenced, except for emergency repairs to existing structures required to eliminate hazards or threats to health and safety. And project must qualify as one or more project type. There are 5 distinct project types: large family, senior, high risk, supportive housing, and special needs. For the purpose of calculating percentages in this section, do not include the manager unit. They are not restricted units. For large family, at least 25% of restricted units have 3 or more bedrooms, and a minimum of an additional 25% of restricted units have 2 or more bedrooms. Senior projects are eligible only if all units are restricted to residents who are 62 years of age or older, with the exception of certain projects that utilize federal funds. For more information regarding these varying age restrictions for senior projects, I'd refer you to MHP Guidelines Section 7302A3. High risk involves a project that is currently an affordable housing project at risk of converting to market rate. Supportive housing consists of a project where at least 15% of the total units and not less than 10 units are set aside for individuals experiencing chronic homelessness. A special needs project requires 25% of restricted units set aside for special needs populations. Please refer to the 2019 MHP guidelines for populations that may qualify as special needs in Section 7301Z. Projects may qualify as one or more project type. However, they must meet all requirements of at least one project type. Now, at the time of application, the sponsor must demonstrate site control by submitting documentation naming the sponsor or the entity controlled by the sponsor. If the project is a scattered site, all of the developments on the various sites must have a single owner and property manager at the time of the closing of the department loan, with the exception of any non-residential condominium units. Please refer to the UMRs for acceptable forms of site control. Please note disposition and development agreement, or DDA, are specific to public entities. If you are submitting an exclusive negotiation agreement, or ENA, the ENA must be for negotiation of acquisition of the site and must contain essential terms of the acquisition agreed to by both parties. If it's an entity other than the sponsor, the organizational documents submitted with the application must clearly demonstrate sponsor control and extend through the award date of December 31st, 2020. All completed applications must be submitted through FAST. Details of the FAST process will be described later in the application submission section of this presentation. The application and all supporting documents must be submitted as specified in the document checklist, which can be found in the application. The application must be sufficient for the department to perform a thorough review and is complete pursuant to guidelines section 7318. An initial supportive service plan is required for supportive housing and special needs population project types and is also required for a project mix that has SH and SNP units, but may not otherwise qualify as an SH or SNP project. For example, under the scoring criteria, points are made available for projects who will set aside 10% of their units for CES referred individuals that are experiencing homelessness. This population qualifies as a special needs population and will require a service plan and must be clearly labeled on the max loan and unit mix. Please ensure that supportive housing and special needs population are entered consistently throughout the application. The service plan must be suitable to the needs of the target population and must demonstrate a specific feasible plan for delivery and funding and must meet the core components as laid out in the 2019 MHP guidelines. Also, please note that if you intend to fund services from project operations, this must be included in the supportive services plan budget and the operating budget. Supportive housing and special needs projects must demonstrate integration of the targeted population with the general public units by physically integrating the targeted populations with the general population to the maximum extent feasible, subject to health and safety requirements and Code of Federal Regulations. And two, in projects with more than 20 units, no more than 49% units restricted to occupancy by the target population can be assisted by department funding sources. Thank you very much for listening to my portion of the presentation. I would now like to introduce you to Deborah Taylor, who will be presenting the scoring section of application review.
Good morning, everyone. My name is Deborah Taylor, and today I will be discussing the second phase of the application review, which is scoring. This scoring criteria chart is presented in the July 2020 NOFA and the June 2019 MHP guidelines. This chart breaks down the maximum points that can be obtained in each category with the maximum points of 115. We have one bonus point available for the MHP program, and I will go over the bonus point later in the presentation. The department shall rate and rank applications in accordance with guidelines section 7320B. Under development and ownership experience of the sponsor, there are negative points of 50. I will also go over this information later in the presentation. This is the first scoring category, serving lowest income level. Points will be calculated based on the information filled from the max loan and unit mix table. The more units you have in a lower AMI, the project will receive higher points. Remember, the deeper the affordability, the greater the points. If your project is designated as rural according to the TCAC methodology, the 55% column will open and autofill from the max loan worksheet. You must supply supporting documentation on how you arrived at your rural designation. You must meet rural designation at the time of application. The next scoring category is addressing most serious local housing need. As Lynn mentioned earlier in the What's New section, points will be awarded for large family new construction projects located in a high resource or highest resource area, or large family projects having at least 15% of the restricted units occupied by special needs population as defined in 7301Z. For projects proposing 10% of their restricted units set aside for homeless populations and are filled by referrals from the CES may receive 5 points if answering yes to both parts. Continuing with addressing most serious local housing needs category, question D. There are 3 parts to this question, and pay particular attention to the ors. You can only be awarded 5 points no matter how many questions you answer yes to. Development and ownership experience. Completed projects must have a minimum of 10 units or a minimum of 5 units if the project was less than 15 units, and at least 70% special needs population units. For development and ownership experience, question B, points are awarded as follows. Projects completed in the last 10 years, There are 4 points to each project completed in years 1 through 5, preceding the application due date, and 2 points for each project completed in years 6 through 10, preceding the application due date. Continuing with development and ownership experience, negative points may apply. As stated in the application, 5 points will be deducted for each occurrence for a maximum deduction of 10 points each in one of the 6 categories. We realize that there are 6 categories. However, the total maximum negative points that can be applied is 50 points. Now let's look at the next steps when trying to determine if your application will have negative points. The occurrences or events shall not result in the deduction of points if they have been fully resolved as determined by or to the satisfaction of the department as of the application due date. If you have any projects that have been awarded HCD funds, we recommend you contact our Asset Management and Compliance, which is our AMC department at amcbranch@hcd.ca.gov prior to submitting your application. Leverage of funds. Applications are scored based on leverage of funds other than MHP used for permanent funding of the development cost attributable to the restricted units. This chart has been expanded so that the calculations we use are more transparent, and we have provided notes in red to aid in understanding these calculations. The points earned for supportive housing units are now showing for clarity. These points are rounded to 3 decimal places. The total points earned in this section will round to the nearest 10th. Under project readiness, enforceable funding commitments for all construction and permanent financing must be submitted. For construction financing, points will be awarded for the following: obtaining enforceable commitments for all construction financing. We are now requiring an EFC for the 4% bond financing. This financing will no longer be considered committed. We do not require a commitment of the bond allocation. However, we do require a commitment from the bond lender. Points will also be awarded for adoption or certification of all necessary environmental reviews, such as the California Environmental Quality Act and the National Environmental Policy Act, and land use approvals. For permanent financing, points will be awarded for private financing. Please provide a term sheet for the financing to confirm terms stated on the application. In regards to operating subsidies, they must be evidenced by a letter of intent or other documentation to include the source, amount, number of units, and terms of the commitment. Project-based voucher subsidies do not have to be committed. If you have applied for more than one program at HCD, please make sure you disclose this on your application and provide us with an award letter. If it has not been awarded, then it is considered not committed and points will not be received. Continuing with project readiness, points are awarded based on your current approval status. You may receive points only for one category. 3 points for obtaining all required land use approvals or entitlements necessary prior to issuance of a building permit, including discretionary approvals, or 2 points for submission of complete application to local authorities for land use approval under non-discretionary local approval process, whether it has been approved or disapproved, or 1 point for a letter signed by a certified planner that the project meets all requirements for approval under non-discretionary local approval process. The next area we will go over will be infill and adaptive reuse. Points will be awarded for infill development, including adaptive reuse of vacant and underutilized commercial or industrial building located in a development area served with public infrastructure. In the MHP application, you may select the option that is applicable to your site. The options are listed here on the slide. Please be sure to include aerial photos of the proposed project site and a narrative for adaptive reuse. For proximity to amenities, applicant must submit an amenities list and a project area map. The next slide will show an example. As shown in this example, the amenities list must include a name of the service amenities, address, distance from the project, and the TCAC points. You must identify that you have earned at least 15 TCAC points. Here's an example of the amenities map illustrating the amenities and distance from the project. If any of the required information is missing from the amenities list and map, this may result in a loss of points. Sustainable building methods. To gain points in this section, you will need to provide supporting documentation, which may include the following: an energy scorecard or TCAC application section signed by an architect, or a letter from an architect confirming energy efficient methods to be used. In addition to the above, you will need to complete the narrative block within the application, describing how you achieve the maximum point scores available for using sustainable building methods under the TCAC regulation 10325. For large family new construction projects located in a high or highest resource area, as shown on the TCAC HCD opportunities map, you will receive the 5 points plus 5 points for meeting each of the following conditions: proximities to amenities and sustainable building methods. Please note that the opportunity map must be a current map that is published and in effect at the time of application. Bonus point. The bonus point is offered as an inducement to fully form borrowers' entities in advance and provide the organizational documents necessary for the efficient production of the standard agreement. Applicants which have fully formed the borrower's entity, including all general partner entities, such as managing general partner and administrative general partner, and submit complete borrower organizational documents as specified in the MHP application, shall be awarded 1 bonus point. Again, we want to emphasize that the bonus point is offered for fully formed entities. For profit sponsors, which have not included the necessary nonprofit partners, will not be eligible for this bonus. Applications that include to be formed entities or indicate an intent to change the borrower's organizational structure at a future date will not be eligible for this bonus. And finally, the tiebreaker. In an event of the tie, the department shall rank applications based on the lowest weighted average affordability of restricted units of 60% AMI units and below. This ranking is based on a formula. Please see the application and guidelines for further information. Thank you. And next up, I would like to introduce Mylan Riggs, who will go over the feasibility phase.
Hi, everyone. My name is Mylan Riggs, and I'll be guiding you through feasibility, the third and final section of the application review. When reviewing the development budget, verify the following. Contractor overhead and profit cannot exceed 14% of the cost of site work plus structures, excluding builder's general liability insurance. Hard cost contingencies are limited to 5% for new construction projects and 10% for acquisition rehab projects. If amounts exceed these limits, a letter of explanation or comments must be provided. There are costs that may be included in other line items or have multiple costs included in a single line item. We ask that you separate each cost as much as possible. If for some reason the amount cannot be broken out, please include the amount or amounts in the comments section. Some examples of these costs include prevailing wages, accounting, and miscellaneous items. The department will verify that these items do not include any ineligible uses of funds. Anytime you add an other cost, please remove the specify in parentheses and state what the cost is. Additionally, if there are multiple costs included in a single line item, please break out in the comment section. An operating reserve is required to cover operating shortfalls resulting from department-approved operating expenses exceeding operating income beyond the rent-up period. The operating reserve is calculated from replacement reserves, non-contingent debt service, and projected operating expenses, excluding the cost of on-site supportive service coordination. For tax credit projects, the department requires 3 months reserves, and non-tax credit projects require 4 months reserves. If other funding sources require a higher reserve amount than that of the department, please indicate the reason for the higher amount in the comment section of the line item. Transition reserves are required when a development utilizes project-based rental assistance. In the event that a rental assistance contract is terminated, the reserve must be sufficient to prevent rent increases for rent-assisted units for 1 year after the rental assistance ends. See the guidelines section 7312F2 for this requirement. When determining the total development cost, please make sure the amount in the development budget matches the permanent funding sources listed in the Development Sources tab in the application. The department will lower the loan amount of the requested MHP funds if the funding sources exceed the development cost. There is a high cost verification calculator as part of the application. If the high cost verification exceeds 160%, an explanation is required and may result in disqualification. The department will review the operating budget for the following, but not limited to, the employee information section, bookkeeping and accounting services, 0.42% annual mandatory debt service for all HCD funds, annual bond issuer fee, and mandatory debt service. In previous rounds, applications were submitted without completing the following: number of employees, full-time equivalency or FTE, payroll taxes, workers' compensation, and employee benefits. I want to specifically point these out as they are the most common items missed in the application. Please make sure payroll taxes, workers' compensation, and employee benefits are all broken out as much as possible. For the employee unit section, be sure to include the job title, unit type, and square footage for all employees living on site. If the project funding includes another type of operating reserve than the department requires, please include documentation or a letter of explanation providing the following information: the purpose of the reserve, the source of the funding, the amount of the funding, and the terms for disbursement. Examples of other types of operating reserves than the department requires include, but are not limited to, capitalized operating subsidy reserve, capitalized operating deficit reserve, and local operating subsidy program. Replacement reserves cover the cost of repairing and replacing failed or damaged capital items and to cover extraordinary maintenance expenses, as approved by the department. For new construction, it is the lesser of 0.6% of the estimated construction costs, which excludes construction contingency, general contractor profit, overhead, and general requirements, or $500 per unit. For rehabilitation, it is initially $500 per unit and is subject to change at permanent loan closing. Finance expenses should include mandatory debt. Mandatory debts are your amortized loans, HCD 0.42% annual debt service, and bond issuer fee. As a reminder, generally, balloon payments are not allowed on senior debt, except where the department's regulatory agreement is recorded in a position that is senior to the debt with a balloon payment. Balloon payments are allowed on junior debt during the term of the program loan only where the department determines that the balloon payment will not jeopardize project feasibility. Since they are mandatory debt, the 0.42% annual debt service and bond issuer fee need to be included in the finance expense section of the operating budget. Please remember to include the 0.42% annual debt service for all HCD funds. Asset management, partnership management, and similar fees are not to exceed the amount allowed for the current year. 2020 is $34,426 a year. For projects that require proposed rents, please select the proposed rents drop-down as illustrated here on the cash flow analysis. The application will be underwritten by the department using restricted rents, and the regulatory agreement will reflect proposed rents. The project will need to be feasible under both proposed and restricted rents. The project must demonstrate a positive cash flow for 15 years, utilizing assumptions of an annual 2.5% increase in gross income and 3.5% increase in operating expenses. The first year debt service coverage ratio should not be less than 1.10 or greater than 1.20, although there are limited exceptions to exceeding the 1.20. Two examples are cash flow after debt service does not exceed 12% of operating expenses, also known as the 12% rule, or a project must project a 20-year positive cash flow using the assumptions under UMR 8310I to assure project feasibility. Residual receipts and sponsored distributions are paid 50-50. The department may share with other public entity residual receipt lenders on a pro rata basis. Private sponsor loans are paid from the sponsor's distribution. That concludes the section for feasibility. We will now be moving on to Joe, who will be presenting a section on application submission.
Thank you, Mylan. Hello, I'm Joe McNicholas, and I'll be wrapping up the presentation with a section on the application submission. All application and supporting documentation are due September 15th, 2020 by 11:59 p.m. Pacific Standard Time. Your application must be submitted through the FAST system. The complete application should be uploaded and submitted by this due date. There are no exceptions. Applications will not be accepted after this date and time. We no longer require wet signatures or physical files, so binders and flash drives are no longer required. Please be aware the FAST online support and help desk closes at 5 p.m. Although FAST will accept the application and supporting documentation until 11:59 p.m. September 15th, FAST online support and help desk closes at 5 p.m. Tuesday, September 15th. Here's a link to the FAST webpage. Furthermore, the FAST link can be accessed through the MHP website. You will need to set up a profile with FAST prior to uploading the application and supporting documentation. There's also a FAST application manual on the MHP website. Select the MHP Round 3 NOFA as circled on this slide. This is a highly competitive process. Applications must meet all eligibility requirements upon submission. You will not be able to add items to the application after the due date of Tuesday, September 15th. So please double check for completeness before submitting. Remember, faxes, late, hard copies, or walk-ins will not be accepted under any circumstances. It is crucial that your application is organized properly, as it will be evaluated based solely upon the materials contained within the application to determine completeness and compliance. Remember, you are waiving any claim of confidentiality and consenting to the disclosure of all material upon request. It is important to note that the information included in your application becomes a public record, which is available for review by the public. Please only provide information specifically requested within the application. This concludes the section on application submittal. We provided you with a lot of information in this slide presentation. The following few slides provide links to resource tools that may further assist you. This is a link to the HCD website at www.hcd.ca.gov. So sign up and receive listserv updates and announcements. Here are the handles for social media: Facebook, Twitter, LinkedIn. Here are the links to the MHP website, 2020 TCAC regulations, methodology for determining rural status, TCAC opportunity maps, and California government codes. Thank you for attending our presentation of the Round 3 NOFA. Additional questions may be sent to the MHP mailbox at mhp@hcd.ca.gov.
Thank you all for joining us today for this informative workshop where we have presented much information on the Round 3 MHP NOFA. Again, as Joe had said, please forward any questions that you may have to the MHP mailbox at the address located above. Take care. Thank you.